in my years of working HR probably 24 times, and that's a lot of times, to have to explain to somebody that yes, they're getting a raise, but no, they're not going to earn less money. And I've had people wanting to turn down raises because they didn't understand how taxes worked and thought that they were going to earn less money after getting a raise. And these were all adults. It wasn't like I was explaining this to a 13-year-old. I was explaining this to 50-year-olds. So my goal has always been, hopefully none of the students that ever come out of my class will turn down a raise because they think they're going to earn less money because they don't understand how income taxes work. So that's what we're doing today. So today is going to be math heavy. And I kind of use the word math. Really what we're talking about is arithmetic. It is all addition, subtraction, multiplication. That's it. There's no anything beyond that. So as we're going through this, you will definitely want to have a calculator with you. It's going to make your life a lot easier. And you can use the calculator on your phone, calculator on your computer. If you have one of those really fun graphing calculators from Texas Instruments that they make you use in math class, use that. Anything at all works as long as you can do, like I said, basic addition, subtraction, multiplication. And the whole reason is there's no reason to try to do this longhand when you have the tool with you right there. So that's what we're going to do today. We are going to talk about income tax and how to calculate income tax numbers. And this will make you smarter than guaranteed like 90% of the entire population. So let's get my screen up here. All right, quick thumbs up. Can you guys see the whiteboard? Cool. Okay, so if you look at the left side of the whiteboard, I have the 2020 income tax brackets and amounts. So this is the actual tax that if you're filing for tax by this coming April, these are the numbers that are used. The numbers for 2021 are in existence right now. The IRS just hasn't updated their website with those numbers yet. So this was good. Pulled this directly from the IRS website, and the IRS is the one that does all of the tax collection and accounting. So I figured this is legitimate data. All right, so we're going to take a look at what these numbers mean, and then we're going to kind of reformat them to make them easier to work with. So if you look over here, we're going to start over here where it says rate. So we have two columns here. So rate. So we talked about tax rates yesterday. Tax rates are always percentages. So in this case, you've got a number of different tax rates. If you recall from our last lecture, we're doing income tax, which is progressive, which means as income goes up, the percentage in tax you pay will go up. So it starts here at 10% and then goes up to 12, 22, 24, 32, 35, and 37%. So those are your tax rates. In our second column here, we have the income levels that you'll pay each one of these rates for. So in other words, 10% is going to be 0 to 9,875, 12%, 9,876 to 40,125, 22%, 40,126 to 85,525, and so on. Now, you don't need to copy this information down. We're going to change the format around to make it easier to work with. You're more than welcome to copy this down if you want, but we're going to recopy this in a different format to make it easier to use. Now, here's the confusing part. So I'm going to explain how income taxes are calculated, but the explanation doesn't always do a whole lot. So we're going to do a whole bunch of examples. Some of you may catch on to this immediately and understand how to do this immediately. If that's one of you, that's great. That's awesome. Bear with us as we do a couple more because I want to make sure everybody understands this. Some people catch this right away. Some people we need to go through 5 examples, which we're going to do. So if you catch this right away, that's awesome. Good job. Just bear with us for the next couple. That's a good way to check and make sure you really do understand. So this is how the calculation is done. So let's say, we've got tax rates. Each one of these, just kind of for terminology here, each one of these little things right here is called a bracket. So if we refer to this is the 10% bracket, 12% bracket, 22% bracket.
Do we write down the bracket too?
You can if you want, but we're going to rewrite all this stuff.
Okay.
Yeah. So that's just when we use the term brackets, we're just referring to brackets. And we talk about brackets, we refer to them in terms of the percentage, not the dollar amount. So this is the 22% bracket, 35% bracket, 37% bracket, and so on. So the way this works, and like I said, this is confusing. I'm going to tell it to you, and then we're going to do a live examples to see how it works. Let's say that you earn $100,000 a year. So if you earn $100,000 a year, which tax bracket do you fall into? And feel free to yell out the answer. 24%.
Oh, whoops.
24%. Yep. You see right there. So 100,000 somewhere between 85,525 and 163. So if you earn $100,000, you fall into the 24% tax bracket. This does not mean, and not is underlined 5 times. This does not mean that you pay 24% of $100,000. This is where things get tricky. If it was like that, man, this class would take like 3 minutes and it would be super easy. But that's not how it works. So you're in the 24% tax bracket, but you're not paying 24% of $100,000. What you're doing is, like I said, I'm going to explain this and then we're going to do a lot of examples. You're paying 10% on every dollar up to $9,875. Then you're paying 12% on all the dollars between $9,876 and $40,125. Then you're paying 22% on all the dollars between $40,126 and $85,525. Finally, you're paying 24% on all the dollars that you earned above $85,526. So there's going to be a number of steps to do to calculate how much tax you would actually pay. So just keep that in mind as we go through. You're not paying 24% on $100,000. You're only paying 24% on the number of dollars that fall into the 24% bracket. You're paying 22% on all the dollars that fall into 22%, 12% on all the dollars that fall into the 12%, and then 10% for all the dollars that fall into the 10% bracket. So if that doesn't make sense, don't worry. We're going to do this a bunch to really understand how this works. So what we're going to do is we're going to take this data and we're going to redraw it using a tool that you learned in first grade. That's how we're going to simplify this as much as possible. So think back to first grade math. I'm sure you all remember it very, very vividly. So in first grade, you probably learned about number lines. So quick thumbs up. How many of you remember or talked about number lines early in your elementary school career? Cool, they're still doing it. That's good. I even double check with elementary school teachers, make sure they're doing this. So we're going to use number lines to solve our tax problems. And keep in mind as we go through this, people want to make this a lot more difficult than it is. We're using number lines, and you learn number lines in first grade. So if we're using stuff you learned in first grade, can't be that terrible. So we're going to draw a number line. So we're going to start this here. If you're taking notes, you might want to take your notes long way on the page rather than short way. And the reason being is we're going to work left to right. Our number line is going to be kind of long because we're going to take all of this data and put it on a number line. So you can take notes however you want, but that might be, if you're writing the stuff down, you might want to do it landscape rather than portrait. All right, so we're going to start our number line right over here. Then we're going to stretch it way, 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 way out here. It's probably going to go longer than this. We'll see. All right. So thinking back to first grade, this is before you started learning things like negative numbers and algebra and all that. Generally, what's a good starting point for a number line?
0.
0. I like that starting point. We're going to start with 0 because we're talking about tax dollars here, and the least amount of money that you can earn is $0 per year. So we're going to go ahead and start our number line with 0, just like we did in first grade. Now, if you remember how number lines work, you would probably have one little line over here for each one. So we'd have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The problem with what we're doing now is, man, we got to go up to like 518,401. Nobody has time to draw 518,401 lines. We just don't have that time. So we're not going to draw every single number on here. We're only going to draw the important ones that we need to know. So we're going to move over here. So the next number we're going to draw is 9,875. Because that's our first tax bracket, 0 to 9875. The next number we're going to put on here is going to be 40,125. Now, if we were to zoom in to this, you would see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, all the way up to 9,875. And then if you were to zoom into our next one over here, you'd see 9876, 9877, so on. We're not going to draw all of those. We're only going to put the important ones. And the important ones mark the upper levels of our tax brackets. Next one is going to be 85,525. And then we're going to put next one, which is 163,300. And then 207,350. And then over here, we've got our last one, 518,400. And we know that it's possible to make more than $518,400. So we know this kind of goes on forever. That's sloppy, and we're making numbers, so I'm going to rewrite this. There we go. Okay, so with this, does anybody not see where we got these numbers from? All right, so what we have here is basically we've just recreated our tax brackets, but on a number line rather than in a chart. Next thing we're going to do is we're going to throw in our tax rates, because that's an important piece of information too. So our first tax rate is going to fall on all the dollars between 0 and 9,875. So we know that all the dollars that fall into this section of the number line get taxed at 10%. Then we move to 12%. We move to 22%. Then we move to 24%. 32%. 35%. And then the upper one up here is 37%. So all we did now was take this chart that we have and we put it on a number line. And this is what we're going to use to calculate our tax. And you're going to see why we use this number line. So I'm going to give you a method for how to do this. You can calculate it any way you want. I think this is the easiest way to calculate it. Other than going to Google and going to the income tax calculator and typing in your income and the number pops up. That's super easy, but I think it's important to know where this number comes from. All right, so here's kind of our order of things. Step one, start at 0. We always start at 0. Maybe we should have rearranged these. You know what? I'm going to, sorry to make you erase stuff here. I'm going to do this a slightly different way. I don't like how I used to do this. So number one is actually going to be mark your income on the line. First thing you do is mark your income on the line. Now, start from 0. Third step, work left to right. Fourth step is calculate tax at each tax rate. And the fifth part is add. Now, this doesn't make sense to you. We're going to go do a bunch of examples here. Show you what this is like. So step 1 is mark your income on the line. Step 2, start from 0. Step 3, work left to right. Number 4 is calculate tax at each rate. And number 5 is add. So let's see what this all means. So we're going to start with a very, very easy one. Let's say you earn an income of $5,000. We're going to see how to calculate that. So what's our first step? What are we going to do?
Put a mark at 5,000.
Okay, so we're going to put a mark at 5,000. Doesn't have to be accurate, just as long as you get it in the right income tax bracket. So we know the 5,000 is going to be right around here, somewhere halfway between 0 and 9,875. And we know it's right there because we remember number lines. Leslie, you're going to get a lot of extra credit because you have an orange cat.
Hey, what about me? She's my cat.
Well, then we will share the wealth there. Orange. I had to interrupt classes to say that because orange cats are the greatest. We have one. All right. Sometimes when you talk about taxes, you have to bring cats into the whole mix. All right. So.
Yay, tax cat.
He does my taxes for me.
That you might wind up in prison if that's the case, but that's okay. So first thing we did was mark our income on here, so we know 5,000. Now we're going to start from 0. We'll put a little point right there. We started at 0, and we work left to right, calculating each tax at each rate. Well, we only have one rate here because we're going to go from 0 to $5,000. We're going to go to each mark that we see. So the first thing you want to do is figure out how many dollars we tax at 10%. This is pretty easy because we know that the difference between 0 and 5,000 is 5,000. If you need a calculator for that, 5,000 minus 0 equals 0. So this is an easy one. We just take the full $5,000 and we multiply that by 10%, which gives us $500. So on an income of $5,000, you'd pay income tax of $500. That's easy. Clean this up a little bit here. So here's our next challenging one. So I'm going to go through this one to see how this process works, and then you're going to try the next one. All right, $20,000. Step 1 is we need to mark our income on the line. So which tax bracket does $20,000 fall into?
12.
12%. So it's somewhere in here. Again, doesn't really matter if you get it 100% accurate or not. but we know it's right around here. So there's our income. So we're going to start from 0. We're going to start right here, work left to right, and calculate tax at each rate. So the first thing we need to do is we're going to move here, and we need to stop over here because we need to calculate our tax for 10%. So the first thing we need to do is figure out how many dollars do we tax at 10%. And we do that by taking 9,875, subtracting 0. This is the easy one. So we know that all these dollars get taxed at 10%. So our first step here is we take 9,875, we multiply that by 10%. That's an easy one because we can just move the decimal point over a little bit. That's $987.50. All right, our next step, and this is where things get. So now we're here. We're going to keep working left to right to our next hash mark. Oh, that's right there. So the first thing we need to do is figure out how many dollars do we tax at 12%. In order to do that, we need to figure out how big this gap is. So to figure that out, you're going to take $20,000 and subtract 9,875. So feel free to yell this out. How many dollars do we tax at 12%?
10,125.
10,125. That's correct. Multiply that by 12%. 0.12. We get 1,215. Now we need to add it together. So we have to take the amount that we tax at 10% and the amount that we tax at 12%. Add those together. That gives you $2,202.50. So on an income of $20,000, you are going to pay $2,202.50. Questions on how we calculated that? All right, you guys want to try one on your own? I know I've taken all of the excitement away from you, so now the excitement is thrown into you. So here is your challenge. And if you don't get this right, that's okay. That's why we're going to do a few of these examples. See if you can figure out the amount of tax on an income of $50,000. Take a few minutes on your own to do that. And if you get an answer, feel free to just yell it out. And then we'll go through the process.
Is it 6790?
That's correct. Yep.
Cool.
A few more seconds and we'll go over this process. All right, let's see how we did here. So we're going to go through our process. First thing we want to do is we want to mark on the number line where our income is. So it's 50,000. And which tax bracket does that fall into?
$22.
Okay, 22%. So it's somewhere around here. So there's our income. So we start at 0. And first thing we need to do is figure out 10%. And we even already have that number calculated. So we know that there are $9,875 in that tax bracket. Multiply that by 10%. And that's going to give us $987.50. Our next step is we have to figure out how many dollars to tax at 12%. So we keep moving left to right. So we need to take 40,125 and subtract 9,875, which gives us how many dollars, or how many dollars do we tax at 12%? Anybody? I have this information. But
30,250.
correct. 3250. Multiply that by 12%. And that's going to give you $3,630. Are we done yet? No. If we stopped here, we wind up in prison. And there is your life tip of the day. Don't wind up in prison. All right, we don't want to stop here because if we only calculate tax for $40,125 and we earned $50,000, that is tax fraud or tax evasion. And those are illegal things. We don't want to do that. So we're going to go ahead and make this little jump here. We have to figure out how many dollars to tax at 22%. So to figure that out, we need to figure out how big this gap is. Take $50,000 and subtract 40,125. That gives you $9,875. Multiply that by 22%. And you get $2,172.50. The last thing we want to do, our last thing here, we need to add these together. Add all those numbers together, you get $6,790. So on an income of $50,000, you would pay $6,790. All right, we're going to do one more. And keep in mind, you can use some of the information you've already calculated to help speed this process up if you want. No sense in doing things again. See if you can calculate the income tax on an income of $100,000.
Is it, where'd it go? 18,079.50.
That is correct. Good job. Give everybody else a minute or so to finish that up, and we'll look at our process here.
Leslie is way too quick at the simple math,
It's the good luck cat.
right? You should let Tabby outside, hon.
I had my cat in my office here for one class, and it was just I couldn't teach. There's a big cat head right here, and
Yeah, when we let the cat out on the balcony with me, she insists on being in my lap, all up in my way, and just I can't do anything. So I just kind of sit there and just give her pets.
well, I had one class. I had the cat here, and then I had to kind of bump him off my lap, and then he went to the door because they keep all the doors shut in here, and just started like howl meowing to get out. And as soon as I let him out and closed the door, he was on the other side howling and meowing.
Running back in. Yep. Cats don't like closed doors.
Yeah,
It's
working
just-
from home is
no.
Well, I had to let this one lay on me because she kept walking on the laptop here. So
We'll have to do a pet show and tell day one day before we do something. All right, let's take a look at this. Let's see what we got. So our first step, we know that we're going to start here at 0. We're working left to right. Let's try to make this work again. Oh, I'm going to move this down because technology. There we go. So we start at 0. We stop at our first mark, which is 9,875. We already have that figured out over here. So we know that our
Tabby.
first tax bracket is 9,875 times 0.10. That's going to give us 9,875. Then we're going to move to our next tax bracket, which is 12%. We even already have that figured out. 3,250, multiply that by 12%. That's going to give us 30. Now we got to figure out how much to tax at. I even forgot to put my jump the gun here. All right. Now for our next one, calculating 22%. We take 85,525, subtract 40,125. We get 45,400. Multiply that by 22%. That equals $9,988. Are we done yet? No, if we stop here, we go to jail. We don't want to go to jail. So, got to figure out 24%. Take $100,000. Subtract 85,525. That gets you how big this chunk right here is. And that's going to give you 14,475. Multiply that by 24%. Get 3,474. Pull this up a little bit. Add these all together. Lots of numbers here. We get $18,079.50. So on an income of $100,000, you're going to pay $18,079. Now, I like the number 100,000 because it's easy. We can kind of look at percentages wise on this to kind of see how this all works. So we know that at $100,000, you are in the 24% tax bracket. However, if you were to pay 24% of $100,000, you'd be paying $24,000 in income tax. But since you're not paying 24% on the full amount, you're going to pay less than 24%. So at $100,000, you're in the 24% tax bracket, but you really only pay about 18% of your income in taxes, not 24%. Any questions on how these calculations are done?
sorry, I wasn't muted. I just coughed all over you. I'm sorry.
That's okay, no worries.
Can you actually scroll up to the chart for me?
Yeah. Oh, the chart here. Let me get. There we go. So a couple things, 2 things with this that are important. So one is your tax brackets change every single year. This is part of the annual tax plan. So the percentages change and the dollar amounts change. What doesn't change is the process. So if you understand how the process works, it doesn't matter what the dollar amounts are and what the percentages are. You can still figure it out. And there have been some very, very drastic changes. Just kind of give you a good example, one of the biggest changes. In 1979, we had 14 tax brackets. So now we've got what, 1, 2, 3, 4, 5, 7. There were 14 tax brackets in 1979. In 1981, there was a huge overhaul of the tax system, and we went from 14 tax brackets to 3 tax brackets. So these can change all the time. The percentages can change as well. We used to not have a 12%. It used to go from 10% to 22%. 12% came in about 4 years ago. There used to be a 39% that's not there anymore. Now it's a 37%. So these numbers do change every year, but understanding the process doesn't. So keep that in mind. If you look, you can look up the new tax brackets for 2021 for this tax year, and the numbers are going to be slightly different. Usually it's not huge drastic changes, tends to be smaller changes, but the numbers will be different. But you can still calculate the same exact way, same way the process goes. The other thing is, and you'll probably be happy to know this, on your quiz, you will have a couple questions like this. The numbers will be very, very nice and easy and round. Again, it's not, it's not my goal to see how many numbers you can type into a calculator. So the numbers themselves will be easy. You still have to know the process to solve it, but the math will be a lot easier, a lot simpler. Because like I said, I want to see that you understand the process, not so much that you can type a whole lot of numbers in your calculator at once. So much smaller tax brackets are much easier to calculate. So any questions on how this calculation occurs? You're now smarter than 90% of the people in the country who don't understand this. So let me give you an example of how this messes people up, how this messes people's thinking up. So I'm going to take part of this and let's see. I'm going to take this section right here that I'm circling. I'm going to redraw it and kind of blow it up so we can see a little bit bigger. So I'm going to explain why I've had to have the conversation so many times about, let's go, we don't want red, because red means you're losing money. Okay, so all we're doing is here, I'm taking this number line and I am blowing it up a little bit. 5. So we know over here, we've got the 12% tax bracket. And over here, we have a 22% tax bracket. So I told you guys at the beginning of class, the conversation I had probably 24 times when I worked in human resources management of telling people that they got raises and them saying, I don't want the raise because that's going to bump me into a higher tax bracket and I'm actually going to earn less money. So here's the thing to keep, maybe put a poster on your wall. You will never earn less money by getting a raise. It is impossible to earn less money if your salary increases. Yes, you'll pay more in taxes, but not enough to offset that. So let me explain why people thought this way and why people still think this way. I have still spoken with people who said—
Is it possible that a radical tax increase for the percentage could make that happen? Like, if it was such a dramatic change, or if it was, I mean, such a large percentage that if you did make that, if you did have your income at that threshold, that you would lose money.
You would never lose money if you got more money. Now, you could earn less money with a change in tax law. That definitely does happen. But with just a change in income, assuming the same tax law, you're going to earn more money. And I'm going to show you an example of kind of what people think when they don't understand this and why it's not really true. So I use this example here for a reason. So took that number line and blew it up. So let's say you currently earn $40,000. You're right on the threshold, right? You're kind of right over here. So right over here is about $40,000. So that's your income. and you find out that you're going to get a raise this year. It's not going to be much, but you're going to get a raise this year. You're going to get a raise to $41,000. Well, that's going to bump you into the 22% tax bracket. So you're getting a raise from 40 to 41,000, meaning that you're moving from the 12% tax bracket to the 22% tax bracket. Now, the reason why we just spent 45 minutes talking about this is to get you to understand that when you're in the 12% tax bracket, you're not paying 12% of your total income in taxes. And when you're in the 22% tax bracket, you're not paying 22% of your total income in taxes. However, that is what a lot of people think, because that's the easier way to think. That's what a lot of people think. So in their minds, I'm going to show you some calculations. These calculations are not correct. But in their minds, at $40,000 a year, they're in the 12% tax bracket. So they say, all right, well, I'm going to pay $4,800 in taxes. And that's 12% of 40,000 is 4,800. So I'm going to pay $4,800 in taxes, which makes my actual take-home pay $35,200. Because if you take 40,000, subtract your 4,800, you earn 35,200. Now they say, well, now my new income is 41,000, but I'm in the 22% tax bracket, which means I'm now going to pay 22% of $41,000. 22% of $41,000 is $9,020 in taxes. Subtract 9,020 from 41,000, and you get $31,980. In their minds, they're taking a pay cut. The problem is they didn't calculate this correctly. You don't take 22% of $41,000. In this case,
you'd only be paying the 22% on what, $875, I believe?
Yes, $875, not $41,000. So you would, in fact, make more money. Now, yes, you're going to be paying higher taxes on $875 of that raise, but you're still earning more money. And I've had this talk with people a lot.
What if you you calculated it correctly with the correct portion of the income in the correct bracket and the other portion in the other tax bracket? And then if you took the final tax that you have to pay and you calculated what percentage of the income that is the percentage larger now that they're in another higher tax bracket?
So what you're talking about is the actual percentage of your salary you're paying in taxes. Yeah, so that's known as your effective tax rate, which we don't cover in this class. So to give a good idea, just to see the numbers are easy, let's look at our $100,000 example right here. Because $100,000 is easy to take percentages from. So at $100,000, you're in the 24% tax bracket, but your effective tax rate is 18%. Because you're paying $18,079 on $100,000. So is that what you're asking?
Yeah. So if you did get the raise, you wouldn't necessarily be having to pay so much more that the raise isn't making a difference for your income, but you are paying a larger overall or effective percentage.
Yeah, you're going to pay a higher anytime your income increases, your effective tax rate increases, and that's where we get the concept of a proportional tax. So your effective tax rate always increases, but not by a ton. You know, if we did this, you're looking at about 0.2% that your effective tax rate is going to increase. So yeah, you're going to pay more taxes, but anytime you earn more money, you're going to pay more income tax. Whether it's $1,000 raise or a $4 million raise, you're going to pay more because that's how progressive taxes work. And every country in the world that has an income tax uses a progressive tax. So yeah, I don't get into the calculation for effective tax rate, but that's what you're asking is called the effective tax rate. And this is something I always calculate for my own income. Is I don't care what tax bracket I'm in. I want to know what percentage of my income am I paying in taxes. That's really the important number. You're
Yeah.
going to make most of the population's head explode if you talk to them about that. But yeah, effective tax rate is your only important number. But that takes math to solve, and most people hate math, and they're not going to go ahead and do it. So, and maybe I'm jaded because I've had to have this conversation so many times, but I've explained this to people that have been working for 10, 15, 20, 30 years. I think it's important to understand where these numbers come from and how these numbers get calculated. And where, what kind of messes people up, this kind of links into what we talked about in our last class of, the way that your taxes work is your employer takes a certain amount out every paycheck, and that's an estimated amount of your earnings. Then at the end of the year, you kind of even up. So you either get money back if your employer took out too much, or you pay if your employer didn't take out enough. But very rarely do people ever look at line 14 of their income tax return that says, here's how much tax you paid for the year. That's your super important number. And I guarantee most people, if you ask them, how much did you pay in tax last year? They won't know that amount, but they'll know how much their tax return was. And that's just telling you how much you overpaid in taxes. That doesn't tell you how much you paid in taxes. That's like saying, well, I went to Starbucks and I paid in cash, and how much did your coffee cost? You're like, I don't know, but they gave me back $5.50. Well, okay, did you give them a 10? Did you give them a 20? Did you give them $100 bill? Why did they give you $5.50 back? So and taxes are the same thing. I think it's important to know how much you're paying in income tax every year. That's an important number. And like I said, I guarantee if you go around asking people, one, they'll get upset, which is just weird. But, how much you paying tax last year? I don't know. I've got a good friend who's a CPA who does people's taxes all year, and it's hilarious. And he tells me stories. This is every year. People get mad at him because their return this year, the amount they got back this year, was less than last year. And he has to explain, well, that's just because you didn't overpay as much this year that you did last year. Look at the number of the amount of tax that you paid. That's the important number, not how much you got back. If you want to get a big return, you can have your employer take out massive amounts of money every paycheck. That just means you're waiting a year to get your money back, or the income that you earn. So there's my rant. I get worked up about this stuff sometimes. It's all good. So does that make sense about why you never turn down a raise? If it's offered to you, take it. They're kind of rare nowadays, so if you see one, take it.
Yeah, it makes sense.
And even after, if I explain this to people, what really got them was, I'll tell you what, I'll go ahead and take your raise for you. If you don't want it, I'll take it for you. Then there's like, whoa, okay, see, maybe you didn't understand. So that's why we spent a full day on this, because I think this is important to know. This is not something you're probably going to sit down and teach yourself, although some of you might, which is cool. And it's something that, like I said, I've had this conversation with far too many educated people that don't understand this. I've heard so many people that earn a lot of money. Well, I'm paying 36% in tax. Guaranteed you're not paying 36% of your income in tax. You're probably paying, if you're in, if you're up here, if you're in this $500,000 income range, you're probably paying a lot closer to like 20 to 25% of your total income in tax, because you're paying a bunch of 10%, a bunch of 12, a bunch of 22, a bunch of 24, and so on. So yeah.
I have a question.
Yeah, go ahead.
I'm brain farting on what they're called right now, but are we going to go over the tax breaks that you get for like doing donations?
We don't do that.
Okay.
And the reason, so what you're talking about is tax write-offs?
Yeah, thank you.
Yeah. I know, because that gets more into, that's accounting tax law. But basically what that does, and just kind of a brief overview of, it takes these numbers that we were using. Where's my, there. So it takes these numbers and just lowers them.
I see.
So let's say you earn $100,000. but you've donated $20,000 to Coconino Community College. That's a tax write-off. So you wouldn't calculate your income at $100,000. You would calculate it at $80,000 because you're going to subtract that $20,000 from your income. And now you're going to do the calculation at $80,000. So that's what a tax write-off is. Then you have a tax credit. And this is stuff you guys don't need to know, but since you asked, might as well talk about it, right? Then you have a tax credit. Tax credits are a lot more powerful than tax write-offs. So tax write-offs are going to lower this amount, the amount of income that you're going to pay. A tax credit lessens or reduces the amount of tax that you're going to pay. So let's say you get $1,000 tax credit because you paid a whole bunch of money in tuition. And I think they're still giving that tax credit away. So what they say is, all right, so figure out your taxes. So let's say you earn $50,000 and you figure this out and they say, well, you have $1,000 tax credit. Well, now you're not going to pay $6,790 in taxes. You're going to pay $5,790 in taxes because you had that $1,000 tax credit. So tax credit lowers the amount of tax you pay. A tax write-off lowers the amount of income that you use to calculate your taxes.
I can't see how the write-off actually benefits the person. I mean, you still lose 20,000, which is more than you would have paid in taxes anyway. But I mean, I'm glad it goes to a good cause, I guess.
Yeah, and that's exactly what it is. You're never, and that's why people, all the time, they're like, I was a business owner for 10 years. And everyone's like, oh, it must be great. You get all these tax write-offs. The only thing I can write off is money I've already spent. That just lowers the amount of taxes I pay. But yeah, you're not gonna profit off of a tax write-off. You're simply gonna owe less taxes. So what it could look like is, let's say you're up here in this tax bracket, and you donate $10,000. So let's say you make $600,000 a year. You donate $10,000 to whatever. Well, really, so you donated $10,000, but that's going to reduce your tax by 37% of $10,000, which is $3,700. So you've donated $10,000, but really that's only costing you $6,300 because part of that you get back. So it's not like you have a tax write-off and all of a sudden money is flowing in. Which is, it's always driven me crazy. And they're like, yeah, well, you have a lot of write-offs. I remember one year we had, this was my absolute favorite was, if you guys remember the big fire in Oak Creek Canyon about 6 years ago, raged on for like 2 months. It was insane. So during those 2 months, tourism was like nothing in Sedona. One, because it was summer, we're not that busy anyway. But then Sedona just had this, fog of smoke all day, every day for 2 months. So nobody was coming to town. So at the time we owned 2 stores. My wife and I owned 2 stores here in town. And sales were just atrocious. They were the lowest we'd ever seen in those 2 months because just nobody was in town. Nobody was buying stuff. Well, in those 2 months, we lost quite a bit of money because we still had to pay rent, we still had to pay electricity, we still had to pay employees, all the stuff we still had to pay. So we lost a lot of money. And it was funny because you could tell people that never really understood accounting or numbers or business, and they were like, yeah, but you can just write that off. Like, yeah, I can write that off because I lost money. Like I lost $10,000 this month, which is going to lower my tax by, at that point, like $1,200. So yes, maybe we lost $10,000 in the business, but after tax write-offs, we really only lost $8,800. But we still lost $8,800. So, when people talk about write-offs, I always, the first thing I always say is, do you know what that means? There was a whole Seinfeld bit about that, if you guys remember Seinfeld from back in the 90s. Kramer was like, oh, they just write it off. And Jerry was like, what's a write-off? And Kramer said, I don't know, but I don't need to know. I'm not the one writing it off. Which was so perfect because that's exactly what it is. People are like, well, you have all these write-offs. Well, that just lowers my taxes a little bit. So yeah, people that, and I'm not saying it's bad to donate money. And so what you get now is it's almost not worth it for most people to donate. I mean, not that you shouldn't donate money, obviously, but the way it works now is everyone just gets a standard deduction. Most people, about 85% of all taxpayers. And that's, what is it? 12,000 for individual and then 24,800 for a married couple. So basically what they say is, look, there's all these different rules of things that you can write off, but most people like you and I, it's not going to matter to us. So let's say you earn $50,000 and you're just individual, single person, no married, no family or anything. So if you earn $50,000, let's use a different color here. So we're over here. Let's say that was your actual salary for the year. You earned $50,000 for the year. Before you even calculate your taxes, what they say is, so take that number and just subtract $12,000 from it. So you're going to subtract $12,000, which is the 2012 write-off, or I'm sorry, 2020 write-off. So now, even though you earned $50,000, you're really only calculating your tax on $38,000. So this is what's called the standard deduction that everybody gets. And the only reason you wouldn't take the standard deduction is if you had other deductions that were greater than $12,000, which most people don't have. So it's just kind of a, even if you earn 50, you would calculate it for 38.
All right,
But the
so
calculation.
say someone makes like more than the highest bracket here. They probably have the wherewithal to pay for these tax experts to come in and examine all the tax laws and find every little way they can pay less. So
Yes.
if all of that is done, is their effective tax percentage lower than some of the other categories?
You mean that if you earned money up here? So let's say you earned $600,000, which is you're in the 37%. Anything over 518, 400. Let's say you earn $1 million. So you earn $1 million. So you're over here, you know, in the 1 million. But you decide you're going to donate $500,000 to Coconino Community College. We're going to give Adam a raise. Now, see, and you donated $500,000. There's a cap on that, but that's not important. So if you donated $500,000, now we're calculating your income on the remaining $500,000 because we reduce your taxable income by $500,000. So now you're over here in the 35% tax bracket. You know, let's say you earn $1 million and you donated all $1 million. You had $1 million salary and you donated $1 million. Now your effective tax rate is 0. You don't pay any taxes.
Yeah,
Is
but
that
what
what
I'm
you're
trying to
asking?
say is, could someone who has, if they have that much money, do they have the wherewithal to find flaws in the system and the complex tax law so that they pay a much
you don't
smaller
need that much. When I was a business owner, we deducted so many different things from our taxes that were all legal. It wasn't like we made stuff up. And we had the CPA. It wasn't like we even had to hire, expensive tax attorneys. So it was, little things like, let's say here, let's go down here. And I'm just going to we'll keep the numbers round. So let's say our income from our businesses were $50,000. Well, what our CPA would go through and he would say, well, did you drive anywhere for business reasons? And we would say, well, yeah, we had to drive between the stores and, we would have to go to different shows to look for inventory, stuff like that. Well, how many miles did you drive? We drove 8,000 miles this year for business related. Well, you can now deduct 50 cents a mile. So now we're going to take 4,000 away from that taxable income because so this is travel. And he said, well, do you have a home office? Yes, we have a home office. He said, okay, is it like in a room? That's where I'm at right now. We're in the home office. Yes, you have a home office. Well, you can deduct a certain percentage of your mortgage if you have a home office. So now we can subtract another $1,500 for home office. And a whole bunch of other things. Did you ever have to take customers out to eat or anything? Yeah, we took our customers out to eat all the time. Sure. Well, now we've got meals, and there's a whole bunch of line items for this. So we take this $50,000 and we subtract the 4,000, we subtract the 1,500, we subtract the 2,000, and now we're looking at what's that? 4, 5, 6, 75. So we're looking at So instead of $50,000, we are calculating income based on 42,500 based on all these things. So you
Business
can look,
expenses.
yeah, business expense. So there's all kinds of things. And
Okay.
yeah, and you don't need finance experts. I mean, you could, a CPA has the software to do all this stuff for you. You know, where
Especially if you
experts
keep
come in.
receipts and track everything.
Yes. And when you do things like, yes, my wife and I went out to dinner and we happened to mention the business. So now that meal is a business expense. That's a gray area. Don't write that part down, but a lot of those happen. Where the actual experts come in, you know, where you would really have is, let's say you are Google and you've got operations in 26 different countries that deal with 26 different tax laws, and you've got different laws with how each company interacts. Now that's why you have a department that has nothing but tax attorneys and tax accountants to figure all that stuff out. Outside of that, a CPA works fine, a certified public accountant works fine. But yeah, you've got, most corporations are going to have a whole entire department that does nothing but taxes. And you're going to have tax attorneys, and you're going to have tax accountants. And if they don't have that, then they're going to hire a law firm that does nothing but tax law. And they're going to hire an accounting firm that does nothing but international accounting to figure all this stuff out.
I think it would be fascinating to see what the effective tax rate would be for one of these million or billion dollar companies after.
Oh, you can look that up. That's public
they've-
knowledge. You can go pull up any company's annual report, and it'll tell you exactly how much tax they pay. Because it's a line item on their income statement that they have to publish every year. So yeah, you can look that kind of stuff up. It's very low, usually around 0.
Yeah.
And we talk about, not in this class actually, in microeconomics, we talk about one of the ways that companies are, or one of the process that a lot of companies are able to use to help avoid paying taxes. You're going to have to take microeconomics now for that one. See, this is how I sell the classes to get more people over here. But yeah, that's a completely different ball game right there, is international taxes and corporate taxes. And corporations get taxed the same way. It's a progressive system. It's just different numbers. But they have a lot of other things they can use to deduct their income. One of the big things that we use it's called a carry forward loss. And this is one of the reasons, you know, this obviously it's not a political statement, but this is one of the reasons why Trump didn't pay any taxes. He had what's called a carry forward loss. Amazon is the same way. Amazon has a ton of carry forward loss, which is, okay, so you own a business. Chances are in that first year, first 2 years, or first 3 years, you're probably going to lose money because you're investing in the business, you're growing the business, you don't have a ton of customers yet. Pretty common to lose money in the first year or two. What happens is, let's say that you, in your first year, you lose $122 million. Meaning that you spend $122 million more dollars than you brought in. So you have a $122 million loss. Well, the lowest amount of income that you can pay taxes on is $0, not negative $122 million. So what you're allowed to do as a business is called a carry forward loss. So we're going to take this negative $22 million and we're going to use it against next year. So let's say next year you earn $120 million in profit. You had a good year. Well, you're going to take that $120 million earning, you get to subtract the loss from the year before, that $122 million. So this year, even though you earned $120 million, you're going to get taxed on a negative $2 million because you got that carry forward loss, which means you can now take this $2 million and carry it over to the next year as well. So if the next year you earn $10 million, you're going to subtract that $2 million from that. You're going to pay taxes on $8 million. So Amazon, because they were growing so aggressively in their first decade, they had a few $1 billion in carry forward losses. So basically what they were doing is they were spending a ton more money than they brought in because they were expanding so quickly. So that's one of the reasons why Amazon is yet to pay any taxes. So this year, I think Amazon's actual profit was, it was $4.5 billion. So they profited $4.5 billion. The problem, not problem, but what happened is they don't pay any taxes on that because they have so many billions of dollars of losses from that first decade they were in business. They're just carrying them forward year after year. At some point, they'll be profitable. So Apple is a very profitable company now, but same thing. They invested a ton of money in the first 10 years, and then the second 10 years, they were very profitable, but didn't pay any taxes on that because they had those carry forward losses. Once they were gone, they started being profitable, started paying more taxes. So yeah, you can get a whole entire master's degree in nothing but taxation. You can go to law school and focus on nothing but tax law. It's extremely, extremely complicated.
It's just interesting to see because the progressive tax was meant to level the playing field
Oh yeah,
by taxing the dollars that have more, because when you have more dollars, then combined they have more spending power.
yeah.
So this was meant to level the field, but again, the money in these large portions can negate that. So
Yeah, and one of my big problems too is why do we start at 10 and 12? Why don't we start at 0%? You know, if you're making under $20,000, why are you paying any taxes at all? And that's purely opinion, but you know, it's been this way since 1942. But yeah, why do we start at 10 or 12? Why don't we have a 0% tax bracket down here and then maybe start at 12 or start at 10 and then go up from there?
Yeah, because if you think about it, the people that are going to be less than, you know, in that first bracket there, they're probably, you know, working part-time,
Yeah.
or they're, you know, high school kids with a part-time job kind of stuff. Why do they need to be paying taxes?
Well, and that's such a small portion of the amount of taxes that are collected anyway. It's almost a rounding error. It's not even, you know, a big deal. But that's till they hire me to figure this stuff out. I can only sit here and rant. But that's, yeah, and that's one thing. And you know, that's a question I've never heard people bring up is why don't we start at 0 and not at 10?
these
You know,
are
you
the
could
real
probably have.
discussions. These are the real political discussions right here. This is what I want to be
Well,
talking
and that,
about.
I
Well,
mean,
the
didn't you
politics
say
is-
at some point they had 14 different brackets? Maybe they had a 0 at that point.
they did not. But they had a 90 at the top.
Oof.
Yeah, it started, that started at actually 15%, believe it or not. It went from 15% to 90%. So it's, yeah, it's changed over the years. I've never found one location that's, because I've always been fascinated with, I want to see one location with, show me every tax bracket from 1913 on. I want to see how they change year after year. You can find independently, but there's not one place that has them all. Probably because nobody's going to take the time to put that together because like me and 2 other people would be interested. And that's about it. But that's it. Cool. Awesome discussion. Any other questions? See, taxes are less boring than most people think. All right, that's all we're going to do today. That was awesome. That was a fun class. We're going to talk about Social Security next time. Talk about Social Security tax. That's our focus for Thursday. So I will see everybody on Thursday morning.
When's our next quiz?
Let's see. Thursday, we talk about that. Tuesday, we do a review. And then Thursday's your next quiz. So you'll have access to it next Tuesday.
Cool.
Cool.